Hello and welcome to another update video about GALA. GALA doing some pretty serious consolidation up there and obviously at risk of rolling over, but it's actually consolidating on quite a high level. So at the moment, this is no imminent risk, and that is also why, however, because of this uncertainty up there, this is why I said a possible strategy would be is to move up your stop loss, because we had an entry area here. Anybody who used that, you are in profit now. You can move up your stop loss, at least take it into break even, so to move away from the risk. Or here was another entry point, when we touch these support areas, that's where you can set your limit orders if you want to trade based on this. This is obviously entirely your decision, but certainly we can see that these support areas are super relevant. They do work, and you can see that the market is reacting to them, right? So that's why I like trading support areas, because even if this is only a corrective move to the upside, a B wave, and it will come down eventually, which of course, is in the future, nobody knows about it. I don't have the crystal ball, I'm not a time traveler, nobody is. So it could of course come down in a C wave. Yeah, the structure here looks still corrective to the upside. So a strategy is just to move up your stop loss. If you entered here, when it hit this support area, had your buy limit order placed maybe here or slightly above it, you can move up your stop loss and you take your risk out. Because the risk is still here. Obviously, we're making at the moment just lower highs, which is a bit concerning in terms of, have we already reached the top maybe? Yeah, have we reached the top? So it could just be here an A wave, a B wave, and a C wave, and we come down a bit lower. This is the uncertainty we have to deal with in these markets, but we need to have a strategy around it. So in order to protect you from that possibility, move up your stop loss. And if you get stopped out, there is another chance of entering in this support area. And however, if we drop below, I did say that in the last videos, if we drop below the support area, and this is the relevant support area for this wave 4, because technically it could still be that we are in the fourth wave. If we drop below this support area, we are most likely turning into the larger support area for a wave 2. Then we have to assume, so if 3.41 cent break, we have to assume the wave 1 was already finished here, so the wave 5 of the wave 1, and we're coming down this ABC and finish of a wave 2. So that's sort of what we're looking at, these two possibilities. Again, as long as we're holding the support area, we can focus on higher. It's very simple actually. Now, if you look at it in the short term, the move to the upside here currently looks rather corrective. It's certainly not a 5-wave move. Yeah, this could easily just be an ABC structure. I'm going to show that to you, for example, or a WXY even. So we could have our A wave here, our B wave here, and then we have here a 1, 2, 3, 4, 5. So yeah, A, B, C. The C wave is a 5-wave move. We only have 3 waves to the upside. So it could very well be a B wave. Only if we get one more solid wave to the upside, it could be a 5-wave move. But even then, how to count this? It's difficult. Yeah, you could only say this is a 1-2 setup. I had another 1-2 setup here. This is then the 3, the 4, the 5. And now we're coming down, but we're cutting into the price region of this wave 1. So it's not a valid impulse. So I'm not very happy about the structure that I see here. You could only have it as some kind of a leading diagonal to the upside, which is always unreliable. So I'd be extremely careful here. For me, it's not the time to enter here, because the time to enter is down here, yeah, support. That's the advantage, because when you entered like that, you can just lean back and watch and set up, move up your stop loss. A lot of people recently, I think a lot of new people coming into the space have never heard about technical analysis, how it works, maybe have some wrong impressions how it works and what the purpose of it is. The purpose is not to predict the future. I still get all these questions. Do you think it will break resistance? Nobody knows. Yeah, nobody knows. I have no idea if it breaks above resistance. We can only use the Elliott wave method and any technical analysis, really. You can only use any technical analysis to identify high reward, low risk trade setups. And this is still an ongoing trade setup here. You could have entered here, you could have entered here. Profit taking, yeah, scaling out in resistance. That's how it works. We had an entry area here, would have worked out nicely. Yeah, I think we had one down here as well, but I don't know, can't remember. Maybe it was Solana. But I have no idea if these resistance levels are breaking. I mean, I think it all comes from a lot of people who are making these videos who act as if, yeah, exactly as predicted. I told you so. This is of course rubbish, and of course doesn't work. It's pure luck, yeah. Or all you can control as an analyst and as a trader, particularly, you can control your entries, you can control your exits. You can't control the market, and also the waves. I mean, you're using Elliott wave, but you could use anything. You can use trend lines. Yeah, you can use trend lines. Yeah, simple example. A lot of people then, the waves don't tell you what's going to happen next. Well, they give you a roadmap, and as long as certain conditions are fulfilled, they give you targets at least, and they give you support setback targets where you can scale in. They give you extension targets. So yeah, you have a certain predictive element, but the primary purpose of any TA and of Elliott waves is as well to give you entry points and exit points based on risk. So here, for example, also, if you there are people who trade only using trend lines, moving averages. Here you had a trend line, yeah? You could have entered here, pullback, could have entered here, pullback. At some point it breaks. Of course it breaks at some point, like the count will break at some point as well. What happens then? Then you get a new trade setup. So anybody who saw this breaking could have entered here with a short, for example. What I mean is, if these support areas that the Elliott waves give us, yeah, if they break, then of course you could rather, instead of being pissed off as people are with a poor trading mindset, you could just look at it in terms of an opportunity, because it then will tell you, right, maybe it's a short setup, and instead of a long setup, I'm not turning into a short trade setup. So yeah, I mean, just an explanation. I see this more and more often in the last few days, because I believe a lot of people are coming into space and try to trade what I strongly believe for most people trading is not the option. I don't want to convince anybody to trade here with margin, with leverage, or to trade at all. Trading is a skill you need to learn. It takes months to learn, maybe even years. So for most people, I think just accumulation in a bear market is the better option, but that's only my view. Not saying you can't learn trading, but it's work. Yeah, it's work, and it's more than just watching a YouTube video, because if you don't understand how the Elliott waves work, you can't trade based on them, right? And yeah, I mean, in the channel membership, we provide plenty of educational material. It's up to you if you want to join that, but I'm just saying, don't just trade it and don't understand how the waves work and what the purpose of technical analysis is. Just saying, it's and I always try to explain this to help people to understand, first of all, to manage expectations, but also I can't answer questions where you're asking, do you think it will go higher? I don't know. I don't trade. If I enter a trade, and also you shouldn't enter a trade because you think the market is going to do something. You should enter a trade because it's a bloody low risk, high reward setup. And if it fails, it's not a big deal, because it was low risk. You set your stop loss very tight, and the reward. And you can miss 10 opportunities because your stop loss breaks 10 times. But if you have 3 really good trades in there that cover for all the losses and give you amazing profit, it's fine. It doesn't matter how many trades you win. What matters is your risk to reward, or reward to risk. But just as an explanation, if some of you, because I know a lot of people are new to this, want to learn, take it as inspiration to learn more, honestly, because there's nothing that's gonna set you up for failure in a way, or that's gonna lead you really to a wrong direction. If you have that mindset that you think you can forecast or predict really what's gonna happen next, that you can forecast every little wave here, which is of course not the case, then you're setting yourself up for failure. You need to understand, and the Elliott waves are a great tool for that. They help you understand where you can place your stop loss, where is your risk sitting, and here we have an area of support, and as long as that's holding, the market can go higher in whatever shape or form. There are dozens of different corrective wave patterns that could evolve here. My task my job as an analyst is really to identify out of these tens and hundreds of different patterns that are available. I mean, the market can do anything, right? My job is to identify the 1 or 2 high likelihood patterns based on my experience and based on applying the rules of market structure here. Yeah, hopefully that cleared things up and manages expectations and help you to become a better trader and maybe analyst yourself. And I can only summarize, really. Move up your stop loss if you entered in these support areas. And if we get a breakout above the B wave, it would at least be an indication that we are moving higher in the 5th wave. But I don't like the structure here at all. It looks very corrective. So unless we really break impulsively above this highest high at 5.6 cents, there is still significant downside pressure here. So really only a move above that level in an impulsive fashion would for me unlock really or give certainty that we are in the fifth wave. And a target for the fifth wave, in case I missed it in the last video, is, you know, you measure the length of the third wave, you go to the low of the fourth, that's our current fourth wave. And targets that we have here, the first one is 5.66 cents, so there you go. It's actually not that much higher, but if we break above that, that basically aligns with this resistance there. If we break above that, it could unlock prices all the way up to 6.9 cents. Around the 7 cent mark, you have important resistance anyway. Yeah, you've got this significant high here and this high, so that's pretty much at the 7 cent level. So from 7 cents to 7.3, we've got a resistance area. Be aware of that. Okay, and that's my update about GALA. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye-bye.